In today's video, I'll explain how the Darwinex risk engine works, because it's quite an interesting feature. If you look at my account, you will see that down on the left side, I have the Darwin risk, which is 0.15. If I click on it, you will see that at the moment, I have a short position of 1.7 lots with euro-dollar. And if I switch to the MetaTrader platform, you will see that I have 2 long trades and 4 short trades, or all in total, I have 1.02 short trades plus 0.68 plus 0.45 plus 0.3, and I have long trades, so I will deduct 0.45 and I'll deduct 0.3, and you see that in total I have 1.7 lots on the short side, and this is exactly how much I see on my Darwin. However, this is not the amount that was executed on my Darwin. With my Darwin, I have 0.25, which I receive if I multiply 1.7 by 0.15, okay? 0.25, and this is exactly how much was executed with my Darwin. Or in other words, whatever amount I open on MetaTrader, it will be multiplied by 0.15. So if I open a huge amount of lots on MetaTrader, they will be reduced with 0.15, or they will be multiplied by 0.15, and you can see that from 1.7 I have 0.25 executed on my Darwin. This is how the risk engine is controlling the risk for all the traders. So if someone does something stupid and they open absolutely irrelevant trades or huge trade compared to all of the trades they open, the risk engine will lower that amount. Same thing if you, let's say, keep your trades usually 2, 3, 5 hours, the risk engine will learn that. And if one day you leave a trade for a few consecutive days, they will start closing these trades, because the risk engine knows that this is not your trading style. Maybe you forgot the trade or something happened and you don't have access to the platform to close the trade. So the risk engine is there to control the risk. And in my account, I have current risk ratio of 0.15. And it doesn't mean that you have to take low risk. It means that you have to keep consistent risk. This is what we are looking for when trading as hedge fund managers: consistency. So you see that with my account, it started with 0.30, and then it decreased to 0.29, and then it went lower, and for some time now it is staying at 0.15. So it depends a lot on the strategy that I am using, or in this case the expert advisor that I am using. It's taking into consideration the assets, the lots that I am trading, and the risks I am taking in the account. But the overall goal is that all Darwins will be trading with the same risk, or pretty much they create a level playing field, so it's a fair competition. Or in other words, everyone has the same chances, and it's about how much profit you make per lot. Alright, so if you are trying to game the system and you're trying to build more profits by increasing the lots or the risk, that's gonna be considered as cheating, and it's not gonna improve your ranking or your current position in Darwinex. And keep in mind that the risk engine is personal. It is one for me, it is one for you, and it is different for the others. It is looking for patterns and lots. So basically it is building its ratio by following your trading or my trading, and depending on how I perform, it is calculating this ratio that I just showed to you. Or if I have to say it with very simple words, the risk engine is making it equal for everyone. And even on the other side, if you are opening usually, let's say, 1 lot, and you are trading always with 1 lot, and then in one moment you just open with 0.01, that is way lower compared to your average lot, and in this case the risk engine might increase the lot, so it will follow the same risk that your Darwin is calculated or measured. However, on the Darwinex website there is a detailed guide on how the Darwinex engine works, and I will leave that one down below the video, so if you're interested to learn more you can go through it. If you have any questions, let me know, I'll be super happy to answer. And now I wish you safe trading, and I'll see you guys in the next video.